Welcome to today's What Moved the Market show. I'm your host Prem. It's Tuesday, January 13th, 2026, and here is everything you need to know as the markets close for today. The Indian equity markets turned decidedly red today as investors continued their risk-off stance amid persistent foreign fund outflows and weakness in consumer durables. The Nifty 50 closed at 25,732, down 58 points or 0.23% after trading in a wide intraday range of over 270 points. The Sensex fell by 250 points to settle at 83,628, falling 0.3%. Both indices struggled despite a sharp recovery attempt in the latter half of the session, highlighting continued selling pressure at higher levels. Bank Nifty closed at 59,465, marginally down from opening levels, but holding above key support zones. The rupee remained relatively stable at around 90.21 against the US dollar today, showing some resilience despite the broader market weakness. Consumer durables emerged as the biggest casualty of the day, with the Nifty Consumer Durables Index declining 0.89%, followed by losses in Realty, Pharma, auto, and oil and gas sectors. This marks a dramatic reversal from yesterday's strength, where the market had bounced back after early week losses. On the positive side, PSU Bank stocks led the charge, gaining 0.78%, while media added 0.76% and IT managed 0.65% gains, along with a small uptick in metals. Looking at the top movers, the focus today was squarely on the big falls after yesterday's strength. Trent Technologies emerged as the worst performer in the Nifty 50, plummeting 3.71% to close below the 3,900 level. The retailer struggle, which began after its disappointing December quarter business update failed to impress the street, continued today with investors booking profits amid concerns over rising competition and premium valuations. Larsen & Toubro followed as the second biggest loser, tumbling 3.21% after a recent rally, suggesting that profit-taking in capital goods stocks is running rampant. Reliance Industries shed 1.77% despite backing gains in energy stocks, as investors remain cautious ahead of the company's Q3 results scheduled for January 16th. The company's earlier denial of Russian crude purchases continues to weigh on sentiment. Then, there's the consumer electronics pain. Dixon Technologies crashed 5.1%, extending losses as investors digest multiple headwinds, including memory price shocks hitting handset demand. Revised guidance for mobile units from around 50 million to a conservative 40 to 41 million units, and continued extension of IT hardware import norms, allowing global brands to bring in products, hurting local manufacturing. Our bank fell 3.56%, and even Godrej Properties, SolarIns, and Policy Bazaar witnessed declines ranging from 2 to 3%. On the flip side, the day's gainers were led by ONGC, which surged 3.3% as energy stocks benefited from crude oil strength on Trump's Iran tariff announcement. Eternal, another surprise gainer, jumped 3.16%, while Hindalco added 1.61%. ICICI Bank climbed 1.66%, providing critical support to the broader index and counting for nearly 38 points of Nifty's support. Turning to the technical picture, today's action revealed critical support and resistance zones that traders must watch vigilantly. The Nifty 50 broke below the 25,800 level, but found critical support at 25,700, which prevented a steeper decline. This 25,700 zone is now acting as a pivotal level, and traders are watching it intently. A decisive break below this could open the door to 25,600, and ultimately 25,500, which represents the key demand zone. On the upside, the index must convincingly reclaim 25,900 to relieve selling pressure. Bank Nifty similarly traded in a volatile range, opening near 59,700 and touching a low of 58,800 before recovering to close above 59,400. The 59,200 level is acting as immediate support, with 59,000 as the next critical zone. Breaking above 59,700 and eventually the psychological 60,000 mark would signal a shift toward renewed strength. Sectorally, the divergence remains stark. PSU Banks and IT benefited today, suggesting defensive positioning is in play as investors avoid cyclicals. The broader weakness in consumer durables, Realty and Pharma points to rotational selling out of momentum stocks that have run up significantly. Energy stocks gained on geopolitical tailwinds, while metals showed selective strength. This divergence is a classic sign of a market in transition, where investors are reallocating rather than committing fresh capital. On the regulatory and policy front, there's been no major SEBI announcement today, but the sustained weakness in specific sectors suggests the market is digesting the ramifications of various policy moves. Most notably, the continued extension of IT hardware import norms through December 31, 2026 is acting as an overhang on domestic electronics companies like Dixon. Additionally, trade tensions stemming from potential US tariff announcements, particularly Trump's proposed 25% tariff on countries doing business with Iran, are adding to broader sentiment concerns. Looking at commodities, crude oil prices climbed nearly 3% today on Trump's Iran tariff announcement, with West Texas Intermediate trading near $60 a barrel, and Brent crude holding just under $64. The geopolitical spike in Iran tension is lending support to oil despite broader oversupply concerns. Meanwhile, MCX gold opened the day at 1,42,116 rupees per 10 grams and moved modestly higher throughout the session. MCX silver traded even more buoyantly, gaining substantial ground to reach near 2,68,000 rupees per kilogram, extending its run as investors continue to rotate into safe haven assets amid macro uncertainty. Silver in particular has been the standout performer, gaining over 7% so far this week. On the global geopolitical front, the most significant development remains Trump's move to impose a 25% tariff on nations conducting business with Iran. This announcement came after worsening unrest in Iran and has spooked markets because China, the world's largest crude importer and primary buyer of Iranian oil, could be directly impacted. Any disruption to Iran's 2% contribution to global crude supply could ripple across supply chains and add further inflationary pressures. Additionally, ongoing trade deal uncertainty between the US and India continues to weigh on sentiment, with negotiations yet to reach finality despite multiple rounds of talks. For tomorrow's session, the technical outlook remains cautiously bearish unless the Nifty 50 can decisively reclaim the 25,900 level with follow-through buying. The overarching theme remains one of earnings uncertainty coupled with FII outflows that have now exceeded 12,000 crores in just the first fortnight of January. Until we see either a concrete India-US trade deal announcement or a reversal in FII flows, tactical strength is likely to face profit-taking. Bank Nifty, however, continues to offer relative strength and could be a trading vehicle to play any potential bounce, given its support cushion around 59,000. Watch for any fresh regulatory news or corporate announcements overnight, particularly as several large-cap results are approaching. Here's your actionable takeaway for today. The consumer durables sell-off, driven by memory price shocks and import norm extensions, presents a specific technical setup. If you're trading Dixon on intraday charts, watch for a potential support hold around the 11,000 level, which could offer a bounce-back opportunity toward 12,200. For positional traders, wait for the broader Nifty to stabilize above 25,700 with confirmation before adding to longs. Focus on defensive pockets like PSU Banks and IT, rather than chasing cyclicals until sentiment proves more constructive. This has been your market wrap for January 13th. Send in your questions about today's movements or any stocks you'd like us to analyze on tomorrow's show. Stay tuned for tomorrow's morning wrap, and remember, the market rewards patience and preparation. We'll see you at the opening bell.